Shauna is interested in making a purchase for a local shopping mall. What kind of trading sector does she intend to cover? A. 5 mile. B. 3 mile. C. 4 mile. D. 2 mile. In general, higher-risk investments produce higher returns over time than lower-risk investments. A. True. B. False. Which of the following enables the issue of shares by acting as a middleman in the transfer of funds between the company in need of financing and the general public? A. Securities investor. B. Stock issuer. C. Underwriter. D. Bond issuer. What do you get when you buy a mutual fund share? A. The right to vote at shareholder meetings for the companies the mutual fund owns. B. A share of all the investments the fund owns. C. An ownership stake in the mutual fund company. Which investment account offers tax advantages for retirement savings in the United States? A. Savings account. B. Checking account. C. 401k. D. Regular brokerage account. What is the definition of before-tax cash flow? A. Cash flow before taking income taxes into account. B. Cash flow before property taxes are considered. C. Cash flow taking income taxes into account. You're ready to begin putting together an investing portfolio, but first you must A. Subscribe to a few investment publications. B. Learn about investing. C. Engage a broker who can also help you with financial planning. Since 1970, Buffett has served as chairman and main shareholder of A. Apple Inc. B. Berkshire Hathaway. C. Coca-Cola. D. Citibank. A key difference between saving and investing is A. Saving is for everyone, investing is for the wealthy. B. Your money is insured when investing, it is not in savings. C. Investing has a guaranteed return, savings does not. D. Saving is for emergencies and goals, investing is for long-term wealth. Why is compound interest more beneficial than simple interest? A. Your money grows faster when it is compounded. B. You're taxed on simple interest, but not compound interest. C. Fees for compound interest are greater than simple interest. D. Compound interest is hard to calculate, so fewer use it. The relationship between risk and return can be stated as A. Higher risk indicates higher return. B. Higher risk indicates lower return. C. Lower risk indicates higher return. D. No relationship exists between risk and return. If Jonathan is earning 2% on an investment and inflation is increasing by 3%, what is happening to his purchasing power? A. It's increasing. B. It's decreasing. C. It's not changing. D. Inflation and purchasing power are not related. How can you make money on stocks? A. Buy them when the price is high and sell when the price is low. B. Interest. C. Dividends. D. Holding the stock at least 3 years. If interest rates rise, what will typically happen to bond prices? A. Rise. B. Fall. C. Stay the same. D. Interest rates are not related to bond prices. Which would be considered the highest risk investment type? A. Stock. B. Mutual fund. C. Bond. D. Money market account. How can you make money on stocks? A. Buy them when the price is high and sell when the price is low. B. Interest. C. Dividends. D. Holding the stock at least 3 years. A is a loan given to an organization while it is partial ownership in the company. A. Bond, ETF. B. Stock, bond. C. Bond, stock. D. ETF, bond. Andy bought 5 shares of a company for $10. Later, he sold all 5 shares for $15. What was his profit/loss on the stock? A. Profit of $5. B. Loss of $5. C. Profit of $25. D. Loss of $25. This is a characteristic human investment managers have that robo-advisors do not. A. Options trading. B. Personal touch. C. Futures trading. D. Beating the market. What is the main appeal of an index fund? A. They are always actively managed to add a human touch. B. They are typically low-cost and diversified investments. C. They are always managed by a robo-advisor to remove human bias. D. They give you partial ownership of a single company. An account that is used to buy and sell stocks, bonds, and funds is called a Roth IRA. B. ETC account. C. Brokerage account. D. Target date fund. What is the benefit of a target date fund, TDF? A. TDFs come with lower fees. B. TDFs adjust assets allocation automatically based on retirement year. C. TDFs are insured against loss for the first 5 years. D. TDFs guarantee a certain rate of return by the target date. Putting regular amounts of money into an investment account at specific time intervals is A. Compound interest. B. Diversification. C. Dollar cost averaging. D. Inflation. Which is not a good reason to buy a stock fund like the S&P 500? A. Have a diversified portfolio. B. Have an investment with low fees. C. Don't have to monitor as closely as an actively managed account. D. You want to beat the market with your ROI. What is Social Security? A. Social Security is a private retirement fund run by your company. B. Social Security is another name for a 401k. C. Social Security is a government-run retirement program. D. Social Security is a program that matches your 401k contributions. Why is it important to start investing as soon as possible? A. You take less risk when you are young, so money will be safe. B. You have more time for your money to compound. C. Investing is an easy way to make quick money. D. Fees on investments are cheaper when you are younger. How is a bond fund different from an individual bond? A. A bond fund is a group of bonds and is considered more diversified. B. A bond fund always gives you a higher interest rate than an individual bond. C. A bond is issued by the government. A bond fund is issued by a company. The reason that you will earn a better rate of interest on a CD over a savings account is: A. You agree to invest the money for a longer period of time. B. You must deposit large amounts of money in a CD. C. You have to be willing to risk losing your money. Savings and investing are wise choices for long-term goals. A. True. B. False. Saving should be used for short or mid-term goals. Credit unions and banks are insured up to at least in deposits. A. $50,000. B. $100,000. C. $150,000. When an undertaking uses the cost model, transfers between investment property, owner-occupied property, and inventories. A. Do not change the carrying amount of the property transferred. B. Should be revalued at the date of transfer. C. Are prohibited. An agreement where a borrower, usually the federal government, agrees to use your money for a specific period of time for a specific rate of interest is A. U.S. savings bond. B. Money market account. C. Collectible. A property that is held by a lessee, under an operating lease, may be held as an investment property, but only if: A. The operating lease exceeds 20 years. B. It is a hotel. C. The lessee uses the fair value model. D. None of the above. Which of the following does not define investment property? A. Property held to earn rentals. B. Property held for capital appreciation. C. Property used in the production or supply of goods or services. D. A and C. An investment property shall be measured initially at its: A. Cost. B. Fair value. C. Deemed cost. D. Value in use. If property held under an operating lease is classified as investment property. A. All investment property will be accounted for using the fair value model. B. Depreciation will no longer be charged. C. All property held under operating leases are classified as investment properties. If a property is partly an investment property and partly owner-occupied, the company should account for the property. A. As owner-occupied. B. Each portion should be accounted for separately. C. As investment property. D. As inventory. If a firm provides significant ancillary services to tenants in its property. A. The service fees should be capitalized. B. It may have to be classified as investment property rather than as owner-occupied. C. It may have to be classified as owner-occupied rather than an investment property. A parent company leases a property to its subsidiary. It may be classified as an investment property in the A. Parent company's individual financial statements. B. Subsidiaries' accounts. C. Consolidated accounts. D. Combined financial statements. Repairs and maintenance costs are normally A. Expensed in the statement of profit or loss as incurred. B. Capitalized. C. Recorded as deferred expenses. D. None of the above. If the costs of a major repair such as replacement of walls are capitalized. A. They must be shown as a separate asset. B. The board of directors must be notified immediately. C. Any remaining costs of a previous inspection must be written off. D. All of the above. Which of the following terms does this statement define? The amount of cash or cash equivalents paid or the fair value of other consideration given to acquire an asset at the time of its acquisition or construction. A. Cost. B. Deemed cost. C. Fair value. If payment for an investment property is deferred beyond normal credit terms, any additional payment above the cash cost of the asset will be accounted for as A. Cost of fixed asset. B. Borrowing cost. C. Repairs and maintenance. D. Capitalizable. If one or more assets are exchanged for a new asset, the new asset is valued at A. Fair value. B. Replacement cost. C. Residual value. D. Cost. In the case of an exchange of assets, if the acquired asset cannot be valued, A. The carrying value of the asset given up is used. B. The residual value is used. C. The asset cannot be capitalized. D. The asset should be measured at fair value. An undertaking can choose either the cost model or the revaluation model as its accounting policy for investment property. It must apply the chosen model to A. All fixed assets. B. All investment property. C. Major assets. D. Land and building. A gain arising from a change in the fair value of investment property should be recorded. A. As an extraordinary item. B. In the revaluation reserve. C. In the statement of profit or loss. D. In the statement of other comprehensive income. Using the cost model, the asset is accounted for at A. Cost less accumulated depreciation. B. Cost less accumulated depreciation and any impairment losses. C. Cost. D. At fair value less depreciation. When an undertaking decides to dispose of an investment property without development. A. It is reclassified as owner-occupied. B. It continues to treat the property as an investment property. C. It is transferred to inventory. D. It is reclassified as held for sale.